Indians are borrowing like never before, but the pace of this credit is like a sine curve from extremely high to extremely low. Be it more aspirations or less salary or unemployment or investment appetite or anything, loan volume and value amongst Indians is going up like never before. Hello, my name is Abhinav Trivedi and you watching Mint Explains. Now, sample this. Indian banks extended 15.3 lakh crores in fresh loans during the first 11 months of the last financial year, expanding their total loan book by 9.3% to 175.56 lakh crores. Now, while personal loans took the largest share of the new credit, the share of industry in incremental lending dropped to 14.5%. Home loans accounted for nearly 17% of the total new credit issued, surpassing lending to businesses. The total volume of loans has gone up from 105 lakh crores in March 2020 to 187 lakh crores in March 2025. That's a 78% increase in just 5 years. Not only that, the private sector banks have been steadily gaining market share over their public sector counterparts. Now, RBI data shows that private sector banks gained more than 5% market share in loans and more than doubled their loan book in the last 5 years. At the end of March 2025, private sector banks had a total market share of 40% and an absolute loan size of almost 76 lakh crore rupees. This is a big increase from 34.3% market share in March of 2020. While public sector banks still dominate credit distribution in absolute terms with a loan size of almost 99 lakh crore rupees, their market share declined to 52.3% at the end of March 2025 from 57% at the end of March 2020. Not only that, the share of small finance banks has also gone up from 0.9% in March 2020 to 1.5% in March 2025. But why are Indians preferring private sector banks as opposed to conventionally safer options like government or public sector banks? Well, to start with, private banks' faster credit deployment and potentially greater operational agility indicate increasing customer preference for them. The overall banking system has expanded significantly between 2020 and 2025. Smaller players like small finance banks or microfinancial institutions are also expanding their role, indicating a shift towards broader credit access and inclusions. While public sector banks with bitter experiences of huge NPAs in the past are more vigilant, and seeking a loan requires immense documentation and many checks and balances in place, which takes time. When it comes to private sector banks, time is relatively faster and credit access is relatively easier. That's not to say that private sector banks are not vigilant or don't seek proper documentation, but personal loan amounts, which are largely between 5 to 10 lakhs, have more takers in the private banking space. The private lending sector has also witnessed immense competition amongst banks, small financial banks, microfinancial institutions, NBFCs and others to attract as many borrowers as possible. Now, this has also given rise to a large number of unsecured lending, which is also attracting fire from the RBI, as this would be extremely unhealthy for the country's financial ecosystem. Overall, India's debt levels are increasing and more Indians seek credit for various purposes in their lives. But credit access and loan growth is always a developing story, and we at Mint shall keep you posted with latest updates and developments in this space. Stay tuned to Live Mint.